Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, time for an update on Bitcoin. It's been a fair old while. I know I haven't been very active on YouTube, and on that note I'm not going to be particularly active in the future either for the foreseeable future, so I better explain what's going on. Essentially, my wife has returned to work after an extended period of maternity leave. She took the best part of 18 months off, during which time I was supporting us, and now it's time to return to work. So I've gone back to being a full-time stay-at-home dad, working from home for myself as best as I can, while looking after a 7-year-old and a 1-year-old. Keeps me very busy, and therefore reduces the time I have to make YouTube videos. The time I do have available, I'm putting more into the Patreon side of things, which is still open and still available for people to join, but once again I will not be as active as I have been in the past. Also, over the last couple of weeks I've had some family issues to deal with. Unfortunately, my father has had a stroke, and I had to drive up from South Devon to North Wales to go and visit him in the hospital. He's actually come off pretty well, to be absolutely honest. It could have been a lot worse, but he does have a blocked carotid artery in his neck and therefore requires surgery to open it back up and clear the blockage. It's not fully blocked, obviously, otherwise, well, he wouldn't be with us anymore. It is about 80% blocked though, so exactly what the surgery is going to entail I don't know, but he's in next Wednesday, and I'm probably going to be making a trip up to see him post-op again when I get the opportunity. So essentially I've had a fair bit going on and things to deal with lately. But all in all, I'm going to still try and get videos out on YouTube where possible. I'm probably just going to cover Bitcoin, the S&P, and the occasional other asset, gold and silver, and just get something out when I can. Still doing a weekly live stream for the Patreons, still doing the dividend calendar and the stock rating system for the Patreon as well. So there's still some added value there, but overall I'm just not going to be able to get the workload, the usual workload out. So that's just the way things are. And for the foreseeable future, until my little boy goes to school in a couple of years' time, the channel's probably going to be a bit quieter. I can always rebuild it in the future. At the end of the day, family comes first, and that's that. But enough rambling, enough talking about my personal situation. Let's get on now and have a look at Bitcoin. So we're going to start here on the long-term chart for the BLX. We've got our primary count here, which is bullish. We believe that we have a primary degree wave 1 and wave 2 complete. We now have 5 waves off of the low into what I've got here labelled as minor 1, minor 2. I believe that we are still in a corrective move lower. We may have already completed and will be moving higher. That's one of the shorter term counts we can come and look at later. But I'm leaning on the side of this not being a sufficient correction yet. If this is indeed the first wave off of the low, I would expect it to take a bit longer and come a bit deeper. Likely testing the outside geometry of this pitchfork here, where we have moved up already to test the 61.8% bound of this pitchfork moving up. We can see, or we will see when I show you some other geometry in a little while, how this is actually really quite a neat little test of several pieces of geometry all happening at once. So we've got this 61.8% golden zone in here. As you can see, we've also back tested the downward trend, which was with our wave 4 move. Now we can look at this as 1 and 2, 3, 4 and 5. That's an alternative count. Honestly, it doesn't really matter in my mind how on earth you get up here, as long as you're assuming this is the top. Okay, whatever it is, whether it's the top of a larger time frame or a smaller time frame, we're assuming that this local high is for the meantime a sustained high and will result in a larger correction before resuming upward movement. On that note, we will be entering the wave 3 at minor degree of what I believe will be intermediate 1 of primary degree 3 of cycle degree 3. So we're looking at what will be an absolutely stupendous move over the coming year or two as we head off to new highs, maybe even longer. Now that we're really getting into the freeze here, we'll have to wait and see. But a sustained long-term thrust upwards for the foreseeable future once these corrections complete. That's the bullish count. The invalidation is at 3148.33. Now let's have a look at the bearish count. The bearish count assumes 5 waves complete at a cycle wave degree to the high of November 21, and the first in a double zigzag move lower of an ABCW, ABCX, and now what will be another 3 wave move down to complete a primary degree wave Y of a cycle degree 2. My expectations, if this is correct, is to come into all of the price support that we've spoken about before, which is essentially down at the golden ratio in log here around 10 grand. We've also got support in the region between 10 and 13,000 or 14,000. We've got target Fibonacci ratios here of 1:1 from the ABC and 1:1 from the WXY, both sitting between 11,000 and 13,000. We've got an 89% retracement level here in linear at 10,385, and we've got obvious overlapping point of controls here from the 2 volume profiles of this intermediate wave 1 and this intermediate wave 3 move up within the cycle degree 1, overlapping here all this demand. So essentially the target zone is somewhere between, I make it between 8,000 and 12,000. Essentially we're going to come down and settle somewhere in this area here if we come down further, if the count is bearish and this was indeed a larger cycle wave degree. That is my alternate, and the reason I point to all of those pieces of confluence is that's how deep I think we would go. I think we would come down into this area. However, that is not the primary count. The primary count is still bullish, and I believe that the low is in. So let's look at a couple of things which help support that idea. We've had our first big move after the 60 exponential moving average crosses below the 250 and bottoms out. That's a sign of a very strong bearish phase, and then after that 60 moves back above the 250, we enter a new bullish phase. We have had a deep retracement before back below the 250. We may be in for something like that now, okay, like we saw in 2019 to 2020. But we often trend above the 250 once the 60 crosses back above it, as we can see here. Okay, and as we saw in prior bull markets, also after that 60 crosses through the 250 to the downside, that's the bearish phase. After it gets back above the 250, it trends above it until we reach the next major high. So if we're doing the same now, which is possible, we can see how we've recently moved back above that 250 exponential moving average with the 60, and now we may have a larger correction like we had here, or we may just start trending higher like this. To support this idea is the monthly momentum we have. So if we just switch these averages off, come out to the monthly time frame for a minute. I pointed this out on several occasions now. If we look at the MACD here and we stretch it out so we can observe these previous bearish and bullish cycles, we can see that once we had the here goes back to 2012. If we look at the end of the first big bear market in 2015, once the signal crosses through the average here, or the average through the signal I should say, we enter a bullish phase of momentum, which leads to the next bull market, in this case the 2016-17 bull market. We then have the 2018-19 bear market, and the average crosses through the signal at the top, and then we have this big phase of bearish movement. We then cross back above it. This is the move back in 2019. This is the COVID low. Here's the secondary move up, and then we have the next big bull market, which was 2020-21. And then from November 21, or April 21 in terms of momentum, but November 21 in terms of the actual high coming in place, we see how momentum died off considerably into that high. We got the crossover here of the signal through the average bearishly, and then we entered this big bearish phase, which is now cooled off, and we've now had the crossover of the average for the signal back to the upside, and the first couple of monthly bars of bullish momentum. So if the behavior of all previous bear markets and bear cycles and bullish cycles, if that previous behavior continues, that's what we've done now. We've crossed back into a bullish phase, and now we're going to move higher back above that 250 exponential moving average. And we can see how on the monthly time frame, also if we look at the bearish accumulative volume on the OBV, we've broken that downward trend and moved above it. We can also see that if we have a look at the RSI, we've reached lows on the RSI which were lower than the last bearish cycle of 2019, and the bearish cycle before that of 2015, and the bearish cycle of before that in 2011. So we've reached extremely oversold conditions on the monthly time frame, and we've bounced from those back to neutral in the first move off of the low. All of this to me suggests that the low is in. The low is in, and this first move off of the low is a tentative wave 1 up, and we will probably get a deep and quite nasty wave 2. And if the psychological behavior or expectations when reading wave behavior or wave personality in Elliott wave theory, we should still have a lot of bearish talk out there, and any rejection from these prior support becoming prior resistance into our wave 2 should be very bearish sentiment as well, and that would be a pretty strong sign that we have actually bottomed. So we'll see if that sentiment comes to the fore over the next few weeks. If we have a significant sell-off, I would expect a very bearish attitude to come about, as that is very typical of a wave 2. Often the sentiment within a wave 2 retracement is actually worse than it was at the prior low, than it was at the prior bottom. So we've still got that to see. I feel there's quite a lot of bullishness at the moment, so the sentiment doesn't appear to be in place for a deeper wave 2, but that can change. That can change very, very quickly. All you got to do is have a couple of bad days and things can get pretty nasty, and people can get pretty pretty dramatic pretty quickly, can't they? So we'll wait and see if that's what comes about. So that's essentially the long-term view that I have. There is still a oddball or a one-off count out there, which is still technically possible, which is a flat pattern, where this was A, B, C, flat into wave 4, which suggests we actually are only in the 5th wave higher now of 1, 2, 3, extremely long 4, and then a 5th wave up. It is technically possible, as we did not invalidate the 13.831 level. It also has alternation between a double zigzag and the flat pattern, so we can't write it off. Yeah, it could still be possible, and we could be moving up to new highs only to complete a larger cycle wave 1 up here, but we'll worry about that as and when the count continues to progress towards new all-time highs. We'll have a much better idea of its structure, and once we've got an idea of its subwave structure, we can see how it fits in with our prior counts. But this is still a possibility. Now obviously the bearish scenario, which takes us below this, would cancel this out and get rid of it once and for all, but it is still technically alive. Okay, so before we move on, let's have a look at some of these pieces of geometry I was mentioning. So if we just go all the way back to our primary count for the moment, we can see how I spoke about the 61.8% golden zone test here of this pitchfork 1 into 2. Now I do like how this pitchfork lines up on log scale. We've got this little snagging point here around the median line, we've got a whole bunch of support around the median line here, and a back test of it here, and support of it here. This is one of those things you tend to see when you look back in hindsight prior to putting in this swing low to swing high. You look back and realise that the median line, although not visible yet, it was always there. Okay, and the algorithms were trading around it, and human beings, just by being human beings, were trading around it, and therefore it's been significant. But that's not the only piece of geometry we can see. If we look at our linear channels for a moment, we move the chart into linear, and then we look at our pivot from swing high to swing low. What this does is simply take the two highs here, project them forward as our zero bound, the two lows here, or 1, 2, 3, 4, 5 here as our low, and then we see what kind of extension we interact with beyond that point. So we get a 123.6, 138.2, the 50 gets interacted with, and then the 1618. We move back above the 50, test it, swing in the breeze, move up to the 138, back test it, back test it, back test it, move back below it, and back test it again. So as you can see, we're moving back up through these fib levels. So we may be coming back down before we come back up, before we come back down, before we come back up, before we come back down, and we will probably bounce around these all the way back up to the highs and beyond, because that's just what we tend to do. If we also have a look at, that's the base channel. What we've got here, although this is the idea that a base channel is back tested as part of a wave 4 into the top of the wave 1, we occasionally see wave degrees sat on top of one another, providing prior support. And all we've done here is taken the lows, projected them forward from this high, and we see that we get a pretty much perfect back test of this level. So although it's not interacting directly within the same wave degree of an Elliott wave Elliott wave perspective, it is still providing support. Also, we've got the same expressed here as a base channel but using a fib channel. So we've got the 1-to-1, 0 and 100 in the same place. You can see how all of these little fib levels got interacted with. Here's the 23.6, here's the 38.2, here's the 50, here's the 61.8 golden zone. Okay, projected forward, we sit ourselves right back on top of the zero bound, and we also stopped on the negative 23.6 here as well. Now, if we were to extend this further and further and further, we would see further play and interaction with these levels going forward as well. Okay, now is there anything else I noticed that I wanted to talk about? Alright, oh yes, this is it. So here's more play with that original pitchfork. Let's bring that pitchfork back up. Here's the 61.8% test of the pitchfork off of this primary 1 and 2 pivot, but here is the 61.8% and golden zone test again of this long-term fib channel. Okay, using this long-term fib channel, we can see an awful lot of interaction with these prior levels. Here's the golden zone, right? Here's the 50, here's the 50, here's the 50, here's the 50 getting tested. Here's the 23.6, here it is again, here it is again, and then here's the golden zone getting tested from above, here it is getting tested from below, here it is getting tested from below, here it is getting tested from above, here it is getting tested from below. So we are moving through these levels long term as well. So there's loads of little pieces of geometry that are interacting frequently with the chart. And then there's your favourite Bitcoin bro piece of geometry which I've seen get used, which is this little curvy line that people like to put on the chart. Now, let me be absolutely clear, I think this doesn't mean a fucking thing. Okay, I can draw this on any single upward trend I wish to, on any asset anywhere in the world, and say, oh look, it's following this curvy line. Yeah, maybe it is following this little curvy line, and that's cool, isn't it? Because it's just going to keep going up. But I don't consider this to be a serious attempt at technical analysis, to be absolutely honest with you. But I do find all of the other levels I've looked at to be quite compelling, and in their own right, they fit in with my long-term analysis that we have seen a series of sharp corrections, one after the other, of reducing severity, or lower severity I should say, of 93%, 86%, 84%, 77%. And I believe the reason we're witnessing this over time is because we're witnessing smaller and smaller wave degrees over time unfolding within a much larger super cycle wave 3, which is going to take us, I'm not going to say, somewhere very high up. And so essentially I'm still bullish. I'm not completely opposed to bearish ideas, never will be, and if we break low and break this low, we'll be bearish again. But in the meantime, given the momentum we've seen, given the shift in moving averages, given the long-term structure, everything still tells me to be bullish. And if you want a macro reason for that, maybe rates have peaked in the United States and will come down from here, and that would be your fundamental reason to be bullish. Alright, now we've said all that, so should we go over and have a look at the shorter time counts now, work our way through all of a short time frame. Okay, so here we are on the smaller time frame, and well, on the day time frame, but on the smaller time frame chart. So the bullish count, let's deal with these first, and then we'll deal with the bearish count as well. So the issue we've got here is we've got, off of the low in November, we've got several ways of interpreting the move to the high, some of which accommodate an extended wave 1 and then a shorter 3 and a shorter 5. Some give us a typical extended 3 and then a very short one and a not extended 5th but a disproportionate 5th relative to the wave 1 but still shorter than the 3. So there's a few excuse me, a few ways of interpreting this. So if we just go through one at a time, and I'll explain which one I prefer the most. But that's really the best I can do at the moment. I could just ignore them and say this is what I think is going on, but I genuinely prefer, as an exercise in any way, to look at all the possibilities, and then people have the option of making their own minds up. So, first idea is that we've had 5 waves into an intermediate one. Now this could be 5 waves into a minor one, which is I've got on the BLX, but for the sake of brevity and keeping things a little simpler and clearer with the sub-wave counts that I want to work in, I'm going to start at a higher wave degree. I can always move it back later, but either way, a larger wave degree one completing up here within a larger wave degree move higher. And this is 1, 2, 3, 4 and 5. So we get a back test of the base channel based off of these lows projected from the wave 1. That's quite typical of a wave 4, but it is a very, very deep wave 4, and it subdivides as a double zigzag, and wave 2 subdivides as a sharp correction also. So this creates no alternation in this situation, which is desirable. It's not a requirement, but it's preferred to see. We also have a move up in the 5th of wave 1 here, which doesn't have the best look to it. We have this triangle structure in the wave 4, we have a very long wave 1, and then once again a shorter 3 and a shorter 5. But it's all legal. The 4 does not overlap the 1 with the completion of the position of the E wave of the triangle. The 4 at minor degree does not overlap the 1 at minor degree, and we complete here. And then now we're correcting lower. So the way I subdivided this correction so far is that we have a zigzag, A, B, C into W, a flat into X, and now we're coming down in 5. Okay, for 1, 2, 3, 4, 5, A, B and C. And we're going to come down in another zigzag into the 50 to the 61.8% retracement. It doesn't have to be here, but we've got local support at these highs here, and we've also got support at these highs here and these prior lows. We've also got our local fibs where we've got the 38.2 and the 61.8 and the 50 all inside of this zone here. Right, so we can fall back into here and find support. We can go lower and find support. There's a lot beneath us which can catch us. Okay, as we can see, this is a local demand zone and a more stronger demand zone down here at the 50 to the 61.8. We could find ourselves retracing into this. So that assumes a wave 1 is complete here, and we're now having a sharp correction down into a wave 2. My next idea is less likely overall, I would argue, which is the idea that we had 1, 2, 3, 4 and 5 into a wave 1 here at minor degree, wave 2, and then we had 1, 2, 3, 4, 5 at a smaller degree into a smaller degree 1 and 2, which is now complete. This is 1 and 2 off of the low, and now we will move higher once again at a smaller wave degree. So I would have this as 1, 2. Do I expect this to be sub-minute? Let's just label it as minuet for the moment. Okay, so this is the idea that we're in a wave 3 extension, and we've gone 1, 2, 1, 2, 1, 2, and we'll step our way up as such to build up an intermediate wave 1 at a larger degree. So we'll have 1, 2, 3, 4, 5 at minor degree, 1, 2, 3, 4, 5 at minute degree within the minor 3, and then 1, 2, 3, 4, 5 at minuet degree within the minute 3, so on and so forth until we complete 3, 4, 5 at minor degree into intermediate 1, and then we'll have a much larger retracement on a larger time frame on a larger scale within intermediate 2 before pressing on higher again. I think this is less likely overall. It's not impossible, but it's less likely as so far the retracement in this wave 2 has only come back to 38.2, and it has taken longer to complete a minute wave correction, which is also classified as a sharp in this case, than it took to complete the minor 2, which is almost half the length. You know, actually slightly about half the length, which seems off in my book. Now if this had been a flat correction, I would have probably accepted the longer time frame, but it just strikes me as peculiar that we'd have 1, 2 at minor degree, and wave 2 would be significantly longer but the same kind of correction. so less likely overall, but still possible. Okay, then number 3 is the idea that we are actually still in 5 waves up. This is technically possible as well, where we've gone 1, 2, 3, 4, 5 into 1. Here's the 2, 1, 2, 3, 4, 5 into 3, and now we're progressing into 4, and now we're going to move up into 5. Using Elliott's second method of channeling, assuming the wave 4 is in. I'm making that assumption because we're so close to invalidation point at 25251. If we come below this level, we cannot have this as a count. It's no longer valid. So to assume that the 4 is already in here, I think is perfectly fair, and therefore I've lined up the 2 with the 4 to project the 5 over here. The 3 turned out overall to be longer than the wave 1, and therefore there is no upper limit on the wave 5. The wave 3 does not appear to be extended and show excessive levels of subdivision. However, it shows a pretty clear 5-wave structure and does not show the typical wave 3 extension behaviour. The wave 1 does appear to have an extended wave 3 in it, but when we measure it to the 3, we can see that the 3 is still longer, and therefore no upper limit on the wave 5. We'll wait and see what happens here, but it's still technically possible. Then we've got another alternative here. This is the idea that we're getting a more severe correction down, where we're getting a wave 1 into wave 2 and a wave 1 into wave 2 into 3 into 4 into 5, and this gives us our C. So we get A, B, 1, 2, 3, 4, 5. Sorry, I misspoke there. That's not 1, 2, 1, 2. That's A, B, and an extended C pushing down lower. 1, 2, 3, 4, 5. If this is correct, then a much deeper correction would likely be the case. I would probably stretch this little target box that we've got going on here, drag it down to the 78.6 and move this down to at least the 50. I think that would be more reasonable, and that would be a deeper wave C. That we've had a small A, B, and now we're getting 1, 2, 3, 4, 5, a larger C wave structure. Now C waves are third waves. Okay, so we know that third waves can be stronger than waves wave 1 and wave 5 equivalents. This is also true of A, B and C, because a C is still a third wave. It's not always the case. Corrective waves tend towards parity more often than they don't. However, if they are going to show an extension, wave C's being third waves in nature can be much more violent and much more devastating in a bear market circumstance than their wave A counterparts. Okay, it's just everybody throwing in the towel and giving up. So on the bearish count is where we have the 1, 2, 1, 2. So this assumes that we've had an A as 3 waves, a B as 3 waves, and then we're using one of our 5-wave methods, one of our 5-wave impulses, whether you go 1, 2, 3, 4, 5, whether you go 1, 2, 3, 4, 5, to get up into this high at 29111, and then we're rolling over into a 1, 2, 1, 2, and then it'll be 3, 4, 5, 3, 4, 5, so on and so forth, and we'll come down in an A. All of that will be an A. Then we'll get a big wave B retracement, and then we'll come down in a C. Now this is, I put this down exceptionally deep, but if we come in just to get it out off of the screen so we can't see it, okay? So don't panic and think that I'm saying we're going down to 5,000. I've just pushed it down here to get it out of the way. Alright, we're actually more likely to be heading anywhere between 8,500 and 12,000 as we fill out this structure. On the daily time frame, if we just zoom out a minute, you can see essentially this is just a back test, okay, of all of this. This is just a back test, I should say, of this prior resistance. This was support here, this is support here, this is support here. We've come back in, tested it, fallen below it, back testing it now, and we'll now move lower. So quite a traditional setup, back testing prior support for resistance and then moving lower. Still has some merit, the bearish count does, I won't dismiss it, but my preference is for this. If I had to pick one and someone had to twist my arm, I would say that we've had 5 waves off of the low. Okay, at the end of a bear market, tentative move up into a new bull market. We've completed the first zigzag of a W, X, Y, and we're looking for another zigzag down into our target zone between the 50 and the 61.8, into demand, into support, where we will find our wave 2 within the next month or so, and then we will start our wave 3 move higher, and we'll take out this prior high. On that note, I've just simply labelled this as our major pivots, essentially. Have I put these on? Bear with me, I thought I had. Here we are. We want to get above that previous high. Okay. If we get above that 31030, 31035, I'll make it here actually. If we get above that prior level, then we've either gone 1 into 2 and now we're off into 3. We're in a bullish phase. Or we've gone 1 2 1 2 and we're into a 3, same again, but slightly different, an extended version of it. Or we've gone 1 2 3 4 and 5 will take us above this high here, and then we'll have a large correction. But all long-term counts point towards a move through this level being bullish in one way or another. Whether it's followed by a deeper retracement before moving higher, or whether it's part of an extension higher, or whether it's a wave 3 after completing the wave 2 at a larger degree, all scenarios point to breaking this level as bullish long term. Breaking this level down here, this is another major pivot, because essentially what this does is this removes the idea of there being an extension count in here. So it removes the idea of 1 2 3 1 2 1 2. So 1 2 1 2. If we come back beyond this point here, then that's no longer the case, and we can use that to get rid of wave the second count here, 1 2 1 2, because that's no longer viable. It's already extremely unlikely. If it were to come down, it's not extremely unlikely, sorry. If it were to come down this deep, it would be extremely unlikely at that point, as the length of the correction would be completely obscene relative to the prior wave 2 in that sequence. So if we just come down here and add finally, if I can just find the damn thing, come down here and add invalidation point, and that's where all bullish counts die at that prior low. Okay, 15479. So if we break that, it's bears all the way and we're off to new lows, and obviously it's pretty clear really, isn't it, that if you break that invalidation point, you've broken any hope of that being an impulse off of the low. So let's just add that to the pivots forward here as well, save it. So to sum up, let's just be absolutely clear, the count I would back is this one, that we've completed a wave 1 higher. We're now in the retracement phase of a wave 2, expecting it to bottom sometime this year. Now you might say, well, that's pretty vague, and it is, I'm sorry to say, pretty vague, because we don't know how long this is going to take. We would expect after a significant move high to the new high, not the new high, sorry, to the wave 1 high, we would expect it to take a significant amount of time to correct. So for example, let's say we just used our measurement here. Right, here's how long it took 144 days to get up to this high. So this 2 here on the fib time means that this length plus this length is 2 lengths of the same measure, right? So if I were to move this across now, you'll see how from that high, that's where our 2 is. So this lines up with September this year. So if we were to equal the impulse in time with our correction, we would not bottom until September. If we were to bottom at 61.8% the length of it, we would bottom sometime next month in July. If we were to bottom at 50% the length of it, we would bottom sometime this month in June. And if we were to bottom at 38.2% the length of it, or 32.8% the length of it, I should say, forgive the dyslexia, we would bottom in a week, in less than a week. I think somewhere between the 61.8 and the 2 is more likely. So I'm not expecting us to bottom until we get out into late to July, would be my expectation. But we could bottom short sooner than that. So yeah, that's what I'm expecting overall. That's my preference. I'm not saying it's correct because there are so many options available at the moment, but it's just my primary count. So I'm going to label it that. And then we still have all of these to discount as certain levels get broken. Alright, and we can consider the alternatives as we go forward. But for the moment, I think we're in it. We've completed 5 up. We're in a deeper correction, and we need to shake off the shorter term bullishness. Okay, so we've got this feeling at the moment that we're just going to keep doing this. Now long term, I believe we are. I feel we're a little bit too bullish to have completed a larger wave 1 and now be into a wave 2. So I think further breakdown should bring about that bearishness we need in order for the market to bottom. Okay, so I don't think that sentiment's anywhere near here yet. I haven't heard enough negative sentiment yet, but maybe a significant breakdown in throughout June would be enough to shift people into that bearish state, and that would be the first clue we have to finding a low. Right, so there you go. That's how I see Bitcoin at the moment. And yeah, we've gone through all of our counts. We've gone through the bearish scenario, which I'm not discounting. I'm just overall bullish, and we've covered the major levels that we need to see. Okay, invalidation of that bullish idea is at 15479. Break that level and we're bearish all the way, and we'll have to review in a couple of weeks time and see what we can see, but generally not all that much has changed. So thank you very much for joining me, guys. I hope you have enjoyed this technical analysis of Bitcoin, and if you like what you're seeing and you're new to the channel, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and feel free to leave us a comment in the comment section below. Also, if you're interested in joining the Patreon, there's a link in the description box below. You can access the 16 episode long Elliott Wave series and learn all of this stuff for yourself. There's also videos on technical analysis there, and I still try to do the occasional live stream where possible, so feel free to sign up. Alright guys, thank you very much, and I'll be back with you as soon as possible. Bye.